Olex Network 18, Mission Poshan, Bhavishya Roshan.
Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. And it has been a volatile week for crude oil prices. The output from US has been at record levels and the weekly inventories have seen a decline. This while we have seen a fall in OPEC output, and that has been the lowest in 13 months. The outages in Nigeria and Venezuela has not helped the cause at all. The premium for Brent crude has widened to $11 and experts predict the gap to grow further. Traders worldwide have been struggling to make sense of where the oil prices are headed, juggling countervailing signals from major producers Saudi Arabia and Russia on the path for future OPEC supply. To discuss this further, Edward Morse of Citigroup now joins us on the show. Ed, hi, good to have you. The crude oil prices clearly have been quite volatile, and we have seen the range forming between 75 to 80 on the higher side for the Brent prices. Would you now say that much that is being talked about in the global markets has been factored into the prices, or are we looking at more volatility?
Yeah, we're going to see a lot more volatility. The OPEC countries are trying to stabilize the market, but the more they try to stabilize it, actually the more volatile it will be. And I think there are, a bunch of reasons for this. There's probably a heightened amount of geopolitical risk in the market. I don't remember a market that has as much geopolitical risk as this one, not just from the standard producers, but from other factors as well. So we see the geopolitical risk factor coming in and coming out of the market. The producer announcement from St. Petersburg a week or so ago kind of calmed the market down, but we don't know whether they're going to do anything or not. We don't know how much Iranian oil is going to be off the market. We're in an era of the failure of the petrostate, and that takes oil out of the market unexpectedly. So yeah, volatility is here to stay.
All right. But I understand the volatility will continue to stay until the OPEC meeting that is set to happen on 22nd of June. But the real question is, will OPEC come out with its own statement? Will it cut supplies? Will it increase supplies? What is your sense? Will OPEC and its allies actually increase those supplies and barrels into the market?
Well, I think they will. The question is when. And it's intriguing that the talk on adding oil to the market came from the Russian side, not the Saudi side. And the damping of that talk is coming from the Saudi side, not the Russian side. So, we have a series of statements from the Russian side that would indicate that Russian companies and the Russian economy may be better off at a lower oil price. So there is a real difference between these two giant market participants, Saudi Arabia and Russia. And it really has to do with their currencies. One currency, the ruble, floats and it is tied directly to the price of oil. The other currency is tied to the dollar. It's pegged to the dollar. So it moves up and down with the dollar. The dollar's been appreciating. And higher prices mean higher revenue for Riyadh. On the other hand, higher prices bring a higher ruble, lower prices bring a lower ruble. At a lower price and a lower ruble, you get more rubles per dollar on the petrodollar side, and therefore we have statements coming out of Russia that a price between 40 or 60 and 60 is a much better range for the Russian economy and Russian producers than is a $60 to $80 range. So there is that pressure, and sooner or later, I think we'll see that Russian pressure pushing the Saudis to put more oil in the market. And of course, the Saudis are under other pressure as well. Mohammed Barkindo, the Secretary General of OPEC, has spoken publicly about pressure from the United States on Saudi Arabia to do something to bring prices down. The President of the United States is concerned, as is probably the heads of state in other countries, including your own, about the price of gasoline and the price of diesel in local markets as a result of what's happened to the dollar price of these commodities.
Oh, well, absolutely. And when you talk about India, that's exactly what my next question is really, Ed. What do you think about a nation that is India, where consumption growth is the fastest in the world, given the import dependence of India and the fuel prices being at an all-time high? Do you think India can sustain its consumption growth? And what should really be India's strategies from here on with the kind of volatility and high crude oil prices?
So the answer for that is Yes, you're right. India is the fastest growing economy in the world in real terms, and it's the fastest growing country in the world in terms of the consumption of petroleum products. And the good news of that is that consumption is a direct reflection of GDP growth. It's a direct reflection of health in the economy. And sure, there is a drag, and there are things that can be done. The things that should be done are to continue on the path of openness, probably encourage substitution, particularly on the LNG side. We believe the oil link in LNG is breaking and will be breaking on an accelerating basis, so that putting LNG in trucks looks like it's a very good idea, not just for environmental purposes, but for the flexibility of the truck fleet. China is a demonstration of that. They have an ability in the trucking fleet right now to switch some 300,000 barrels a day from diesel to natural gas or natural gas to diesel, depending on the competitiveness between those two fuels. LNG works very well in trucking, given the medium distances that have to be driven in a country like India, and it is certainly something that should be done. Fuel efficiency is another thing that can be done. California raised the minimum fuel efficiency for heavy-duty trucks driven with diesel. They doubled the fuel efficiency standard. The manufacturers of engines had no difficulty in moving from an average of 4 to 5 miles per gallon to 8 to 10 miles per gallon. Diesel demand in California at a time of growing GDP between 2009 and last year, it didn't grow. Consumption was abated. It stayed pretty even as a result of fuel efficiency standards. So I think there are things that government policy can emphasize that will not drag on the consumer side, not create the things that one worries about in terms of food and fuel inflation, but actually enable an economy to grow with more efficiency.
Well, yes. You know, the other thing that really seems to be bothering the markets is the kind of premium that the Brent crude commands right now versus the UTI or the Ural or the Dubai crude varieties for that sense. Do you see any sort of convergence coming anytime soon, or do you see this divergence really continue? And is it going to actually grow further?
So we're seeing a risk premium, and we're seeing all kinds of things happening with the spreads in crude oil. So one of the separate factors from whether there's a risk premium in Brent crude oil is the fact that the OPEC countries and Russia have taken heavier, sourer crudes off the market. And that means that, and the incremental supply in a relative value condition has been light, sweet crude. Scarcity has been on the heavy side, abundance on the light side, or relative abundance. So the spread between Dubai and Brent has narrowed to the point of almost vanishing, something that is done seasonally from time to time. But this is one of the consequences of the OPEC-Russian agreement. On the spread between WTI and Brent, that has to do with the U.S. system again. And the U.S. Is seeing phenomenal production growth. I think it's going to be between natural gas liquids and crude oil around 2 million barrels a day, year on year, 2018 over 2017. The problem is you can't get it out of where it's being produced. You can't get it out of the most prolific basin, the Permian Basin in West Texas. There isn't the pipeline takeaway capacity. We think this will ease this coming winter, not before then. In the meanwhile, we think that spread can blow out even further than the $10 we've seen in recent days. We think it could go to 18 to 20 and maybe even 25 if there's not enough capacity to take this oil out of the market.
Well, that would be something then, wouldn't it, Ed? But, you know, before we let you go, what is your sense on where the crude prices are headed from here on? Because every report that you read is giving a different view. What, according to you, is a fair price? What is the risk premium? And how would you look at a quarter-on-quarter or an year-on-year forecast for crude prices?
Sure. And the only way you can think about this is through scenarios. In terms of your basic question, how much price is risk in the market? Now that Brent is coming back up again, it looks as though there was $5 taken out of the market that was pure risk. And there could be, in our judgment, another $5 on the risk side. Now, that risk is real. The risk is really tangible. There's a risk that companies, and one large Indian refiner just announced that they will not be taking more Iranian crude. The risk is really real that the amount of Iranian crude taken off the market will be not 100,000 or 200,000 barrels a day, but by this time, a year from now, it could be 800,000 to 1 million barrels a day. So the risk is there. It's a real risk. That crude is in the market today, but it might not be there come a year from now. There's also risk not just from Iran, but from Libya, from Nigeria, from Venezuela, from the fragile countries in OPEC, and Iraq is also one of them. So the risk is palpable. Our base case is that that risk doesn't materialize this year to any significant extent, and that OPEC adds oil to the market at the end of the year, not the beginning of the year. So even in this scenario, we think the market will be flirting with $80 above and below through much of the year, and the ease will only come by the end of the year when all of this new production coming out of the U.S., Brazil, and Canada will come into the market, and we'll see inventories building again.
And that is where the crude oil prices perhaps may see a decline. Well, that is something that the Indian market, of course, could keep an eye on and would be a good news to cheer as well. But Ed, thank you so much as always. Really appreciate you taking time out and coming and speaking to us on, of course, that very, very important subject. Farmers' unions across 8 states launched protests today by shutting down supply of milk, vegetables and essential farm produce. Over the last year, we have seen normal monsoon and bumper agri-production. However, the poor market prices meant that the farmers faced a huge issue of selling their produce at the very low prices. Currently, the market prices for many agri-commodities are below the MSP level, and the weak global prices have also not helped the cause. So what are the farmers' demands then? Number 1, higher prices for their produce. Number 2, a complete loan waiver from the states. Number 3, equal remuneration for small farmers to match Class 4 government employees. Number 4, lifting ban on cow slaughter. And number 5 is implementing the MS Swaminathan committee recommendations. And to discuss that further, we have with us exclusively Agri-Secretary S.K. Patnaik joining us now. Mr. Patnaik, hi, thank you so much for joining us, sir. First things first, and it is being called as a normal monsoon. Sowing has begun for many crops, but the MSP is yet to be announced. When can that be expected? Is there a timeline that the government is working on to that one for?
Well, this is a challenge. This is a challenge that agriculture faces today in India. But I can say last year has been has witnessed a very good agricultural output, which has resulted in more money in the hands of the farmers. So the concept of they being little bit affected by lower price is a very relative concept. But I must distinguish the type of stress which someone undergoes due to less production is completely different from the type of stress one undergoes if there is overproduction. And overproduction necessarily is not a bad thing, because there is plenty of food which is available, and government has sort of stepped up. Government has stepped up in terms of procurement last year to a significant extent.
So while of course I do understand your point that there is some distress and plenty of measures have been taken from the government, but how have you really read into that? Have they yielded result? How have they played on ground?
See, if you say now there is an increased confidence on the part of the farmers that government has responded to their needs very well. If you see the entire historical perspective of the imports in terms of the tariffs imposed by the government, it is only in the last 1 year or so the tariffs have significantly increased so far as import cargo is concerned. So, take for that matter pulses or oil seeds, we have imposed the highest level of tariffs. So, in terms and to protect our domestic farmers, and on top of that we are also WTO compliant. So, you can see that the farmers are very happy with the type of response that government has initiated, and the same thing goes true of oil seeds as well.
Mr. Patnaik, that point is well taken. But, sir, would you say that these are perhaps all short-term measures? What the farmers really are looking for is long-term structural changes, like something like farm loan waivers or high remuneration or Swaminathan committee recommendations. How have you looked into each of these, really?
See, you very well know that government has announced that it is going to give a higher MSP in terms of 50% more than the cultivation cost of the various commodities which come under the regime of the MSP. And you will be seeing that when the Kharif crops MSPs are announced, because government has committed it on the floor of the parliament. So, this is a very big step towards implementing the aspiration of the farmer. So far as giving them more return, we have opened up our markets. As I told you, our export regime has become very liberal, and we are now in close connect with several countries who want to source the agricultural produce from this country.
So the issue also is about the fruits and vegetables, where you, of course, we are looking at very strong numbers last year, this year as well, more than 300 million tons. But the demand is still on the higher side, the supply is trailing. And would you say that this is the after-produce logistics, the storage issues, which still haven't really been resolved?
See, so far as fruits and vegetable is concerned, you know, last year we had a production of 300 million tons, which has gone up to 307 million tons. In fact, if I have to say that the indices for inflation is the least in the agricultural sector. So, that has given, you know, a sort of a better life to the citizens of this country. Apart from that, I do agree there are systemic problems in terms of bottlenecks in the agri-logistics sector, in terms of post-harvesting infrastructure, but the priorities have been redrawn and many schemes have been so altered to give special emphasis on post-harvest infrastructure, supply chain management and value addition. And this is especially the focus which our ministry, particularly agriculture ministry, is emphasizing, and we are very much keen that our schemes, the people, the various state governments make available the opportunities available under our scheme rather than just concentrating on production alone. So, this new thinking has been conveyed to the states. We are hopeful that in the coming days you will find a sea change in the type of emphasis that state governments place on the agricultural logistics and value chain, and I am certain that it will be a new era for the farming community.
Well, that is something that the farming community clearly is looking forward for. But Mr. Patnaik, one thing is about the MSP. I mean, as you have said, and as being talked about for some time now, and the farmers also are asking for it. 1.5 times MSP, are we looking at that? What is the timeline for that really?
Yeah, generally the MSPs are declared around this time of the year, especially just when the commencement of the Kharif season, and we are very close to it. It may come anytime soon, and so that's all I can perhaps say at this stage.
23 commodities, and is there a timeline really? Because as you yourself said, the sowing has begun and it is already late in the day for the MSP to be announced.
No, every year the MSPs all come together for all the 23 commodities, and you will be seeing that the government will be coming out with that. This is only one block, except for some of the crops which are determined by way of deducing it from the existing rate. So, most of the major commodities, cereals, pulses and oilseeds will be out in the public domain.
Okay, so now coming back to the biggest issue for the day, it is the farmer unrest. And while of course you have told us that there's plenty being done by the central government, but even then the farmer unrest is high. Are you not on the same page with the states? Definitely not with the farmers, because that is what they seem to be thinking, because we have had various farmer associations on the channel all of this week, and they clearly are not happy with what the government has been doing in last 4 years. What do you have to say to all of these farmers out there?
See, let me tell you, the central government does the macroeconomic policies which impact agriculture, And so far as the macroeconomic policies which government has enunciated, government of India, it is there for everyone to see, whether it is the Pradhan Mantri Fasal Bima Yojana, whether it is ENAM, whether it is the stubble burning in case of Punjab, Haryana, Western UP, and whether it is agri-forestry mission, whether it is bamboo mission. All these measures speaks volumes about the efforts which the central government is really taken in the last 2-3 years. Now the question is, how these policies actually is getting translated at the field level by the respective state governments and the local self-governments. Now they must also work in tandem with that of the central government. Many of the state governments are trying to do their best, I must say, but some of them are a little late to start, and that is why perhaps you find a sort of lag in terms of some of these implementation, which might have led to some local unrest. But it is not so in the country as a whole. If that would have been the case, we couldn't have landed up with so much of production. See, producing something which the government or which the society needs is not easy, and it does not happen over a short span of time. I can give very proudly, I can give the example of pulses. The shortage of 5 million tons of pulses in just 1 year been met by the dint of hard labor of the farming community is itself speaks volumes, and it did not happen only for 1 year. The second year it has happened, and we are expecting this year is going to happen. So there are some soothsayers which they are pessimistic always that no, it is not going to happen, but the actual field truth is that it belies all sorts of logic. So if the farmers themselves are not hardworking, they are not happy, they will not put their best to give this sort of production. This is the first telltale signs of how agriculture is doing. And let me tell you that due to this, agriculture has contributed significantly to the less inflation which has made the life of the average citizen very happy in this country. And today if you open the newspaper, you find that the Indian GDP has grown to close to 7.7%, and they have attributed it to a very good agricultural growth. This is the headlines today in almost most of the newspapers. So I would still stick on to my stand that Indian agriculture is doing well. By and large, farmers are happy. There have been expressions of discontent by certain sections of the community, I do agree, and there may be localized issues which could have ruffled the feathers of some of our farming community members, but that needs to be addressed by diagnosing it properly and going ahead and addressing those issues. We are fully duty bound to address each and every problem that the state governments are facing, and we are prepared to look it with a fresh mind, and we will ensure that whatever difficulties are faced by our farming community is addressed on top priority. Thank you very much.
All right, Mr. Patnaik, we'll let you go at that. Well, that is assurances really coming in from the Agri-Secchi that the central government, of course, is doing its bit. The state governments need to be more prepared, be on the same page, and whatever problems that the farmer community has is something that the government and the state government will look into with a fresh mind. Well, that's all the time that we have on this segment for you. Thank you so much for watching.